Well, good afternoon, everybody. Welcome to your session for today. I hope you're well, and despite the challenges for you guys in Victoria. And delighted to see you all here today. And we've obviously got the extra session we had yesterday, so welcome back for those of you who made it along yesterday. And obviously, we've just got to do a little check. Hi, Shane. I hope you can hear and see me okay. If you'd let me know, that'd be fine. Hi, Ross. G'day, Dean. Good to see you, mate. Hello, Gary. Oh, good to see you guys here. Thanks, Shane. Right, okay, let's get things kicked off because there's lots going on today. Obviously, this is the opinions of myself and my trading styles. Hi, David, and shouldn't be taken as representative of Go Markets. We are in the business of looking at live markets to see what's moving and grooving and see if we can see anything that's interesting in terms of trading sentiment. But obviously, you've got to do your own due diligence on anything you see or hear, manage risk accordingly, and follow your trading plans. That important message done. Let's just have a look at what's coming across the news today. Obviously, last night the US equity markets were closed because of the long weekend, and US futures are trading pretty near neutral as the market awaits key data. Now, we have had some out already, which is interesting. We'll talk about that in a second. And Asian markets have been cautiously trading throughout the morning. We're off our lows a little bit, but we started sort of quite mixed. We dropped down across all the major indices, and now we're just seeing a pick back up again. It'd be interesting to see what happens. Often, or more often than not, after a long weekend, we get some enthusiasm from those, certainly in the US. It'd be interesting to see whether there's that follow through. But of course, we have got big data coming out. We've seen the US dollar weaker. It was trading near or back down towards support. It's challenging that today. Commodities, including precious metals, have been on pause, but there may be signs of a breakout today. The FX majors, however, still remain relatively range bound. Some of the miners are moving. We'll have a look at those. Cryptos are holding established support, and there's an OPEC meeting as well that may move oil price depending on what they come out with in terms of production, etc. Oil is trading at the top of the range. In fact, we are seeing a little bit of a breakout. We'll have a look at that in a moment. We've got the Australian interest rate decision, and more importantly, the policy statement that goes along with that from the RBA. In a couple of hours' time, we've had Chinese and Japanese PMI data out this morning already, which have beaten expectations, albeit just by a little. And later on in Europe, we've got German jobs, Eurozone jobs, and inflation data. And in US, we've got the PMI numbers. Really busy day today. And the other thing, of course, is that the market's going to keep half an eye on what's going to happen later in the week. We've got some jobs data coming out of the US, which is obviously vitally important. So that's about as busy a day as you could hope for. So the market's got lots to digest, lots of potential market moving information coming across the wires. Let's just let's just quickly have a look at and see what the futures are doing. You can see there that we're pretty neutral on the US indices, as you see there. Interestingly, the Euro futures are up. We're seeing the US dollar move down towards support, which is around about that 89.66 level. And you can see the commodity-based currencies particularly are doing well. We're seeing the Aussie dollar fly with and really generally sort of good feeling, unless you're in USD or Swiss franc. With this sort of market, it could be the we'll have a look at a couple of the other miners, but it's really the USD that's the focus of attention. You can see because of that USD weakness, we've got strength in precious metals this morning, and this is important. These levels are vitally important. We've got crude oil. Let's just quickly pop up a chart, and you can just see context of this. It's all very well seeing, what's that? Let's just close that nonsense down. It's all very well seeing price, but context is important as well. And you can see this. This is essentially highs we haven't seen for, let's just put it on a weekly chart and you can see context. So this is pre-pandemic. highs that we're seeing now. So last saw these in November 2019 at this level. So you can see WTI is trying to break through there. Likewise with Brent. If we look at the economic data, you can see here that the Chinese PMI data came in just beating expectations. Some relatively positive data coming out of Australia, but we're obviously waiting for the RBA rate statement and policy. Any guidance on policy that may give us. You can see also that PMI in Japan has again slightly beat expectations. And as we look forward, then we've got that PMI data out today, and of course jobs data out of the Eurozone and Germany, particularly later on. Tomorrow we've got GDP out of Australia, so that's going to move markets, and we may see the Aussie market underperform in light of that. And then later on we've got some services PMI data and the US jobs data. So that's sort of what's going across the wires. If we just look at what's coming across, the Nikkei was down and pretty close to 1%. The Aussie index was down about 0.75% a little while ago. We'll have a closer look at that obviously in a moment. Morning, Rachel. So let's have a look at some charts. Let's start with the US 500 data. You can see we didn't go away in May. We had a go going away, but then we came back again. So really there's the 1st of May. I think 1st of May is around about there-ish. So we're actually around about the same place, nearly 1% higher, but we are eyeing those record highs. So this data may well push us up towards that if it comes in. Comes in better than expected. Good to hear that you're live, Stephen. That's awesome. All good. So looking at the US dollar, this is looking pretty weak this morning. You can see that down day yesterday, failure to break that 90.21 key level. You can see it's been trading in a range really. So we'll move towards the bottom of this range, and we're not looking particularly flash in Asia. If I just pop this on a 5-minute chart, you'll see what I mean. We've seen a slight uptick over the last sort of 20 minutes or so, but generally just drifting downwards, and obviously that's impacting on some of the other pairs as well as the commodity space. We'll look at gold. This is the news on gold. We talked about 1900 being a key level all last week when we met on just about every webinar. I banged on about this. We are slightly above that, but not creating any great waves. So it's a slow climb up to break that key level. So we're eyeing that sort of 1940 level. Just having a couple of issues with my mouse here. Just give me a second. Just to, if we look at silver, okay, if we look at silver, we can see that's pushing up towards a key level 2. We've sort of moved right back up to 28.12 on the chart there. Just doing a little bit of screen reorganization here. It is really causing me a little bit of angst, this. If we look at copper, you can see copper did duck down, as with a lot of the commodity space a couple of weeks ago, but we'll come back with a vengeance over the last few days. We've got support going on at around about 450, which is that level we hit in 2011. So the data that comes out will affect copper, and we can see if we can break those highs of around about 480. That's the level to watch. I did promise to have a quick look at bring on UK or USD. We talked before about this trading in $5 increments. You can see 70, 65, 60. You can see all the action around these, and we are pushing higher. This again will be a high we haven't seen. In fact, we haven't seen for a long time. Since around about, what's that? That's around about again October, November 2019. So real push high in oil, and it'd be interesting to see what comes out of OPEC, whether they curb production at all. I don't think the market expects that, which is possibly why it's moving high, but you can see why that's important today. If we look across the currency majors, we're going to see a regular pattern here. You can see there that the euro has smashed against this 122.32 so many times now over the last couple of weeks. So we are trading within this tight range that we're seeing there. We look at US yen, not a dissimilar picture, range bound really since the beginning of April. We've just tried that resistance again, but just dropped down back into this range below this 109.70. So little to shout home about on those two. And really the best we can hope for is really with the US yen is possibly a move down to this sort of center part of the range, which will be about 70 or 80 pips. If we look at the short-term chart. We could, if I wasn't having some mouse dramas, if we look at the hourly chart, you can see there's that 200 MA there. That could be interesting. Could see us down to around about 108.60, 108.75. That's an interesting chart for sure. The US is also under a bit of pressure versus the Aussie. As you see here, we've got a move high. We talked about this yesterday. This is our chart of the day yesterday. On the back of this bounce and this sort of 50, 60 pips potential up to this level at 77.87. That's just paused a little bit over the last sort of half an hour, but looks as though it's ripe to test that 77.87 level. GB pound Aussie was looking quite positive, but you saw that strength in the Aussie dollar. So we're sort of stuck under this 184.50 level on the daily chart. So it looks as though we could pull back down again. If we just look at a 30-minute chart, and we actually quite like this as a potential. We'll just put that line there. So just keep an eye on 183. If we do break that, then we could be down around about 60 pips on the 30-minute chart to test that 182.46 level. You can see there. And so this is quite important. So we've got around about 30 pips to go for you guys who are really scalping. That may be interesting. The euro yen on a daily chart really has done nothing over the last 3 days. If you want doji candles, then that's a great example of such. And you have to excuse, I'm really struggling with this. And the US CAD is trading at the bottom of a range at 120.50. So just look for a break of that. Now, we think this might be one to go. And so this is going to be our FX chart of the day. Just look at an hourly chart. You can see it's had a couple of pushes through. So move below 120.46 on the hourly chart would be one that would interest us. We'll just take this back and you can see context of this. So there could be a sharp move down, possibly as much as, actually that's not very good, 18 pips on the hourly chart. If we break that level, then we're good to go. So 120.28 would be the potential entry on this. So ignore this short-term support and look for a break further down of 120.30. We mentioned cryptos really struggling. We talked about this being triangular last week, but we've had a downward test of that 200 MA yesterday. A little bit of recovery today, to just hang on to that with the fingernails at around about this 36,800 level. Watch 34. That's going to be the level that's going to precipitate more selling. And so cryptos certainly are not looking particularly positive at this stage. Look through. Okay, so let's have a look also at the Kiwi US. I did put this up because I saw this was interesting. On the daily chart, you can see how hard it's pushed up against that resistance at 72.82. If we break 73, we could be up for a big move. If we just look at that, let's say we choose 73.10 as our potential entry. You can see that's around about 123 pips. In the short term, not quite so attractive, but nevertheless, there's around about 27 pips up to test this level here. So I guess the message I'm trying to say is that with all of these FX pairs, is they're still primarily range bound. There's not a lot of movement out of a range across any of the long-term timeframes. So the opportunities for FX remain that short-term chart, the 30-minute or the 1 hourly chart, where you can essentially grab 30, 40, 50 pips perhaps. So that's the message with really the FX pairs, and much of that may move on the data we're getting today. Okay, let's have a quick look at the ASX. As I said, we've come off our lows. Let me just refresh this. We'll have a quick overview thing, and then we'll oh, come on. Sorry, I'm being hampered by the technology this morning. It's just not playing games. So I won't stop playing games, sorry. Okay, so do the overview stuff first. You can see that we stop moving. You can see that we're around about 0.4% down, which is off the lows of the session that we hit around just over an hour ago. There's a stark contrast in sector performance. Financials were looking weak across the board. Resources are looking stronger, again, across the board. If you look at the overall advances versus decliners, it's nearly 3 to 1. So not a very happy place. And what that means is that there's is that the stocks that are moving the market, key stocks that are driving the market. If we just quickly flick down through these, you can see Afterpay is actually holding up okay, but there's BHP up slightly. If we move down to, I'm having to use my arrows. If we move down to FMG, you see there FMG having a good performance. I'll have a look at a chart of FMG. James Hardy are worth a look at, and we can also see that Newcrest on the back of that gold is moving higher. And there's Oz Minerals higher too. So most definitely a move higher in the resource space. So let's look at some charts. Battle on through this challenge. Just need to move my screen around a little bit. Okay, can you define what I mean by break, please? For example, you said break below 18. Does that mean a daily close below that level to enter? On a daily chart, Michael, yes. So it depends on the time frame you're looking at. So if we, for example, look at this New Zealand dollar, US dollar, for example, when we talk about a break, we really want that's the key level we've identified, and that comes from the daily chart. So we're using the daily chart as our first port of call, just to get the established ranges. And then we'll look on the hourly chart to see if that's consistent. Then we may use the ATR to say, well, look, if we get a move half an ATR above that level, that would suggest that there is a breakout there. So if we look at 72.82 on the Kiwi USD, we put that about, let's say, 3 pips up from that. So 72.85 at that level there. And so that would be the level that we would say providing it was backed up with some other criteria. So we've talked before about breakout trend. You'd have a little bit of an increase in volume. You'd have it closing towards the top of the candle. So those are the things we have a look at. And really it's best done on bar close, because that's when we get the mature picture as to whether something has broken or not. Intra candle, it can obviously finish up anywhere. So if you're trading long term, and as I said before, FX is so difficult right now to trade long term because it's all range bound. So you're waiting, and you may well get stopped out while you're waiting. There's no clear trend on the long-term charts. Okay, let's have a look at some stocks. Let's start with Galaxy, because this was actually looking quite positive this morning. This is one we've been tracking, and it was in fact our chart of the day last week on the back of this move higher. It sort of got stuck around this 382 level. Looked as though it was up here earlier in the day, but it's just pulled back a little bit. So we'll see where that finishes up. If we break yesterday's high, then I think we're on for a test of possibly this sort of 405 to 410 level. So although in dollar terms that doesn't seem very much, it is 6%. Now the other one in this space that again may be of interest is PLS. So both of these are lithium plays, which I liked in the long term. I have to excuse the dramas I'm having with this mouse. So there's PLS, and we like this chart a lot. We've got crosses of the moving average. Now there's 3 moving averages on here. There's a 20, a 10, and a 4 for some reason. On this, I think that was meant to be a 40 when I put it on. So let's change that to a 40. There we go. So you can see we're moving up in the 40. We've got a cross of the short-term MAs. A little bit of a pullback in volume the last couple of days as we thought about it, but it'll be interesting to see where this ends up. Now 130 looks interesting, 135 looks very interesting. So just keep an eye on those. We mentioned APT, really stuck in a tight range at the moment between around about 92.30 where it's at now and this 97 level. In the first instance, we could expect it possibly to push up and test that 200 MA at around about $101. So anything up to 100 would be useful. So in terms of where it's at versus now, if we sort of say that 96 level is the entry and we're out at below $101, that's 4.3%. So it's not shabby, but nevertheless interesting. Now TWE has been a chart of the day last week. You can see how it's continued to move high. Now this is approaching a really interesting point at 1184. We're going to higher day again today. Just a little bit of profit taken on lower volume yesterday, but let's just take this back so you can see context again. So there we go. So if we break through this, then maybe this 1260, 1270 could be on the cards. That's 4%, and if it breaks that, and there was only one candle that did that, then we're up potentially 8.5%. So we do like Treasury Wines in terms of the technical picture it's given us. JB Hi-Fi we looked at yesterday, and if you need an example of why you should wait until a candle is mature, this is it, and wait until you've got an actual breakout rather than you think it's going to break out. So there you see JB Hi-Fi tested resistance many times, including during the session yesterday, and is really not a happy place today. So a drop of around about 70 cents. So a fairly significant drop on JB Hi-Fi. So there's a good lesson about why you need that mature candle, why you need to break out before you enter a breakout trade. Another one that caught our eye was James Hardie, obviously in the building space. Very strong candle today, off the highs again, and so we're sort of looking at around about this 44.36 level as the upside on this. So a little bit of work to do, but possibly one worth keeping an eye on in the next few days. Now, we talked the strength being in resources. So if we look at Oz Minerals, we had an up day at the start of yesterday and then a pullback, and then much the same today. So we really want to just put this on a line chart. You can see we've got lower highs on this, so we do need to break. We do need to break this level around about 25. That's not really very well drawn, Mike. There we go. About 25.80 to say that this reversal is complete and we're heading back up again. But there's undoubted strength in this, and you can see how it's tested this level the last couple of sessions. So that's the one most certainly to watch. 28 cents in terms of this particular stock is not very much at all, and could, if we get some continuation or some recovery in today's session, could break through there and then test to the upside around about 4.82%. Just having a look to see if there's any you want me to have a look at. Yeah, I can have a look at Qantas. Yep. Now, we did suggest FMG were worth a look at. We've been quite down on FMG recently, simply because it hasn't done as well as the other stocks in the sector. So we're going to drag an FMG chart across onto here. And you can see we may have a change in sentiment here. You can see those short-term MAs crossing. The price action today is really challenging that $23 mark. That's critical for FMG. If we break $23, we could see, as it's underperformed, we could see a potential move higher of significance to retest this level here, which is around about 6% to the upside. So that's without doubt interesting. We'll look at Qantas. Oh, I think I need a new computer. Which is sort of stuck, really. We're waiting for some good information. Obviously, Qantas did not like what's happening in Melbourne. And you can see the bounce down off that 200 MA. So that's really, in terms of where we're at with Qantas, we're just going to wait and see. We needed to break that 200 MA on the daily chart to get technically interested in this. And then that may see it up to $5 in the first instance, where there's a lot of previous price action. So be patient on that. Don't try and predict the bounce. If we get continued bad news out of Victoria, which of course Qantas is only flying internally at the moment, then that's not going to help already a stock under some pressure. Okay, so in terms of our chart of the day, we'll flick in between TWE and James Hardie, but we like TWE as our chart of the day on a break of that key level that we talked about before, which, just to remind you, And if my technology will allow me to do this, right. So we're looking for a break of 1183. I'm not sure it's going to do it today, but it might get pretty close. But a break of that could see significant upside. And there's undoubted strong momentum in this. We need to see some buying coming in. I think if we break that 1183, we'll see some higher volume on that. We've just pulled back on the volume over the last 2 or 3 days. We may have to wait till tomorrow, but see how this closes. But there's another couple there to watch an eye on, including Galaxy that we've talked about before, and James Hardy. Now in the US, there's a couple to keep an eye on. Let's drag Twitter onto the chart. This was one we were watching yesterday last week again, to close this gap. We got some evidence of that, so it was a chart of the week last week. Then it's paused. Okay, so when this opens tonight, if there's some positive market action, we could see this move up the 10% to close that gap at around about 63.86. So that's one of interest. PayPal was another that caught our eye last week. Let's just drag that on, get an update on how it's faring. And you can see how it's sort of stuck. We said 265 was probably the level we'll get interested in, maybe even 270 for a more conservative entry. That's still shaping up okay. But again, we just had a little pullback on Friday in the last half an hour pre-weekend, which just pulled a lot of these stocks down. But you can see how this still finished in the top half of the candle. So there's another one to watch. Now, the other one that I've been tracking, which has been off the radar for some time, simply because was waiting for the market to decide what this would potentially be worth. Now we're reopening again. So if we look at Zoom, we're positioned really nicely. You can see that 200 MA there, which was resistance both at the beginning of April and also towards the back end of April. We're back up there now. We tested it intraday on Friday and finished up on the session. So this is our US chart of the day. The market looks as though it's accepting of where Zoom is. Now, in the first instance, we'd expect to move up to 350. But it's important that maybe you check in on this towards the back end of the session. Tomorrow morning, your time, if you can get up early enough, or perhaps a pending order over 350 if you're not able to watch. But if we do break 350, I see up at 400 pretty quickly. So we could have a very nice move up very quickly in Zoom. Even this move up to 350 is around about 5%. If we look to move up to 400, which I suspect it may if we break 350, then now we are talking around about 17%. It'll depend on, as I said, this is a stock that's been under pressure for some time, simply because the market was trying to pitch what the post-pandemic picture may look like. So we've had this sort of sell-off, a last seller shakeout there, and it looks as though we're about ready to pop on this to the upside. So that's our US chart of the day. Now I'm just going to check on through to see if we've looked at everything that you wanted me to have a look at. Yeah, Apple, I can have a look at Apple for you. Can try anyway. Okay. So we can see where Apple is. It's sort of looking to find a convincing reason to move higher, for sure. If we look closely at the chart, so we're sort of range bound between about 120.60 and around about 127. So at this stage, there's no compelling reason to get in to this, but that's sort of interesting. Josh, TSM. So Taiwan Semiconductor is not a chart that I've had a look at, to be fair. Let's just make sure it's caught up with all the data. Yes, it has. I must admit, although this is a really nice bounce off a support at 108, there, I'll just put on a line chart. You can see how that's support here. A nice bounce off here. The short-term MAs are looking as though they're going to cross. What concerns me about this, I think if you're in it already, this is not a bad place to be. But if considering entry, we've got about 2.5% up to that level, maybe 4%. But that level looks really important, around about 3% higher. And so I think possibly at that stage we may get some, we may get a technical pause there. So I'm not sure if you're not in this, that this may be technically the best place to be, although that most certainly is a positive candle on Friday. So it looks as though it's potentially shaping up to break out of this downwards trend channel it was in. If I can just draw this, actually not a bad example of that. Okay, so there's the downwards trend channel, and we're looking to break higher than that, but it just feels as though this is so noisy around this price area that would need a fairly substantial break to get us interested. If it starts to challenge this 123.80, which essentially was that closing high, 124.46, sorry, which was the closing high of this candle and the closing low of this next candle, then I think we've got something that we can work with. So great one to keep on your radar, and because I think this could be shaping up for something interesting. Okay, US, China. Okay, so US is looking very weak on this pair. So below 640 was obviously a break of importance. You can see how we've just paused at around about the 636 level versus the yuan. But that was I wanted to take that out, not in. But put it into context. We haven't seen this level since May 2018. So this is spectacular in its drop, and it's very difficult because of that to actually plant your flag in where this might go to. There's 633, which looked as though it was interesting in March, April 2018, which the market may keep an eye on, but you can see we've a little way to go to get there. But that could be a short-term interest with a profit target here, but I'm not sure that would be my cup of tea in terms of a potential trade. I think there may be better opportunities elsewhere. I'm sure I had it on here. What am I doing? Newcrest. Okay, so looking at Newcrest Mining, very strange looking chart. Okay, really, really choppy. Not tracking gold significantly. That since gold is challenging a resistance, we're still some way off this with Newcrest, which is why a lot of people prefer trading the pure metal CFD rather than a stock. But this is sort of looking to challenge maybe that 2870 is a level worth looking at going forward. Would I short the banks? Well, let's have a look at ANZ. I'm not sure I would short anything at the moment, just simply because until the data's out over the next 2 or 3 days, I think the market is still looking up. We're still creeping up there. You can see that ANZ's looking weak now. It did attempt to break through that 2880 level last week, but there was always going to be And this is what I mean about always having a look at the upside potential. There was always going to be a more established resistance a little bit higher than that. So even though we got this move through 2870, it was nowhere near compelling enough. Volume was even low on this day as well. So that was really shaping up for a move back down, possibly to a support of that level at that level. So short in this market right now is probably, in light of the absence of the inflation headwind, which seems to be the only headwind that's really prominent right now, although there's obviously some other things chugging along in the background like US-China relations, etc. This really is not somewhere I'll go with this at all. In my personal opinion, of course. Aussie Kiwi, there we are. Drag her on. There's Aussie Kiwi, nice bounce today. This was that New Zealand dollar strength we saw last week, but you can see the bounce there. Obviously, anything Aussie dollar related is going to be influenced by that RBA decision, which is out, I think, an hour or so, or a little less than an hour. And that's shaped up nicely for a bounce, obviously. May work its way back up to the 200 MA, around about 50 pips higher from where we are now, but 50 pips in a daily chart is really, again, not particularly compelling, but that is the way of daily charts at the moment. If we look at a 30-minute chart, we'll see some nice price action on this. So short term is looking to break through that 106.60 level as we speak. And so for a short-term trade, that would be the level I would be looking at as a potential profit target on this. From a technical point of view, that looks solid. Maybe a little bit lower than that. There we go. So around about that 107.18. With FX, if you've got something like a profit target just above a round number, so 107 in this case, then you're probably worth putting it just below that, possibly around about this sort of 106.97. Once you start to do that, you're sort of saying, well, look, despite the fact this is looking exciting, we're now limiting ourselves to around about 40 pips. So that's not a bad trade. That's not a bad trade. Anyway, just I think we've done everything. 2:30, thanks Shane, or 12:30 minus that. So a little over an hour to that Aussie interest rate statement and decision. The decision is going to be a no change, but obviously we're going to be having there may be something in that statement which moves markets. So there we go. We've got a few there to have a look at for you. I hope that's been interesting and useful. We'll see you on Thursday. Before you go, there's just one other thing I want to put in front of you. We have got an inner circle session with Ilan tomorrow from AutoChartist, so it's going to be a stormer. Please, I'm just going to put a registration link. Our rolling registration has not worked, so you will be getting an email today if you haven't already. But what I'm going to do is I'm going to put the link in here. So this will see you for the next, for what's coming up. We've got other things. So I'm just going to share this link now and then I'll tell you what else is coming up. So get registered for this. Remember, no registration is, whoa. That's not what we wanted. Just ignore that. That's my buttons ain't working. Copy link address. Let's try this. Let's try this again. It's an interesting message anyway. Let's see if that's worked. There you go. There's the link. It should be in there now. All good. So what you'll see also, if you click on that link, you'll see what's coming up during the month. So don't miss that. There's some good sessions there. We're tackling some interesting topics. Just one last quick look at the futures while you get an opportunity to click on that link. We're not seeing a great deal of difference going on. We're seeing the US futures still stuck. So not a lot of movement, but the Aussie dollar is where it's at. But obviously we've got that rate decision coming up now. David, you're so welcome. I'm glad today's been useful. Yeah, so do I, Shane. It's the mouse situation has driven me nuts. I hope you've and thanks very much for bearing with me. Seems to have resolved itself now at the end of the session, of course. No, there we go. We're back again. Okay, so look, take care of yourselves. We'll see you tomorrow if you can make it along, and obviously Thursday we'll be back again for this session. So in the meantime, trade safe. We'll see you again soon. Enjoy the rest of your days, and yeah, stay safe as well. Bye-bye for now.